Hi guys, wanted to jump on here real quick and talk to you about, get that fixed right there. Uh, Wanted to talk to you real quick about a really easy cash flow hack. So if you have any sort of cash flow problems in your business at all, and most businesses at some point or another do, I've got a couple of things you can do, you can implement rather quickly that will make a huge difference for you and be a huge advantage for you. And bear with me on this one, so let me explain it. So first of all, we're going to use credit cards to create this huge advantage. So first of all, you accept credit cards. So if you don't already accept credit cards, you should. So some people are worried about that 2 or 3% you have to pay. First of all, you can price that into your pricing, or you don't have to put the full, say, 3% in. You could put 1 or 2% in to sort of offset that cost. But the advantage it creates for you is huge because think about this. If you are doing what I call check chasing, which is not a good thing, right? So you have a customer that owes you money. They call and say, hey, we've got your check ready. We'll put it in the mail. And you say, no, I'll go pick it up. So you get in the car and you drive over and you pick it up. And let's say you spend an hour driving back and forth. So you just kind of wasted an hour. So you think about that and you may like, man, that's kind of a pain in the neck. But more importantly, over a year, think about that. That's 52 hours. Now, if you're like most small business owners, you're probably the only salesperson in your business, or you might be one of the only salespeople, or the primary one. So I would ask you this way: how much money in sales can you bring in those 52 hours? If you didn't waste those 52 hours, how many sales can you bring in? And what's your average sale? So if you start adding those numbers up, it is significant. So if you're accepting credit cards, there's no more check chasing. You can take, so let's say that particular client, that customer that calls you, there's no check, you can put it on a credit card for them and you can get payment right then, right there. So that is significant. Again, you can price that in. No more check chasing. That's completely inefficient and your time is worth way more than that. And so you want to take advantage of that. The other thing you can do, and this one's even more powerful, is to use credit cards to pay your business expenses. Now, that being said, you want to use them responsibly. I'm not saying to charge up a bunch of money. You use it in such a way that you can pay off the balance each month. We don't want you to carry a balance because that defeats some of what I'm about to tell you, the advantage it creates. So first of all, it helps you track spending, right? So you'll get a statement. At the end of the year, you'll get a year-end statement. Most credit card companies will give you a year-end statement. You can see exactly where you've spent your money. But more importantly, it stretches your payable receivable cycle. So let me give you a quick example here, what I mean by that. So let's say you purchase raw materials to make your widgets. So on day one, you purchase your raw materials to make your widgets. And then you go about making your widgets, right? You get an invoice, and it's due in 30 days. So you wait till day 29. No sense in paying it earlier unless you can get a discount. On day 29, you pay that invoice, but you pay it with your credit card. So at that point, depending on your credit card cycle, you have another month to 30 to 45 days before you have to actually pay for the credit card, depending where you're at in your credit card cycle. So what that means is you purchase that raw material on day one, and it isn't until day 60 to 75 that you're actually laying out the cash to pay off the credit card. So that credit card, paying for it on day 29 with your credit card, you just extended it another 30 to 45 days before you have to actually lay the cash out for it. Now, depending on your sales cycle and how long it takes you to sell your widgets, make and sell your widgets, more than likely, you buying that material on day one, you've made the widget and sold it before you even have to pay for the raw materials that went into that widget. Think about that. That significantly stretches out. So again, think about cash flow. That money is not flowing out until you potentially have already collected the sales and the revenue for that widget. So it swings your cash flow significantly positive, as you can imagine. And the other side benefit to using a credit card is get one that has rewards, and has rewards in categories that you utilize. If nothing else, you can certainly find one that gives 2% cash back on everything, anything you spend. So think of it this way. I have a small construction company that I work with, and he spends about $400,000 a year on materials. So he puts all of that on his credit card. So he doesn't run a balance, and that $400,000, again, he stretches out how long it takes he has to lay the cash out for it, just like I just outlined. And then, guess what? $400,000 each year spent, 2% cash back. Those of you who not quick on the mental math, that's $8,000 a year of free rewards money. he uses it for vacation. So I know the first year he utilized it, he and his wife went to Hawaii. So awesome for them. Anyway, just wanted to hop on real quick and tell you guys about that. 2 easy ways: accept and use credit cards responsibly, of course, but to stretch out your payable receivable cycle and significantly improve your cash flow situation. So hope that was helpful, guys. We'll talk again soon, and we'll talk to you then. See ya.